Ladies and gentlemen, good day, and welcome to the post-result earnings call of RailTel Corporation of India Limited, hosted by PL Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vishal Pariwal from PL Capital. Thank you, and over to you, sir.
Thanks, Supnali, and good morning, everyone, and welcome to the analyst interaction with the management of RailTel Corporation. From the management team of RailTel, we have with us Mr. Sanjay Kumarji, who is Chairman and Managing Director, Mr. V. Rama Manohar Raoji, who is Director of Finance, Mr. Manoj Tandanji, who is Director of Projects, Operation and Maintenance, and along with him is Mr. Yashpal Singh Tomarji, who is Director Network Planning and Marketing. So I think results is already published, and I think we can have a brief from the management on the gone by quarter or any other commentary, and then we'll have lines open for Q&A. Thank you, and over to you, Sanjay sir.
So very good morning to everybody. It gives me a great pleasure to interact with you on the company's performance in the backdrop of Q3 financial results for FY26, which were declared by the company on 2nd February 2026. The company achieved operating revenue of Rs 913 crore in Q3 of FY26 as against Rs 768 crores in Q3 of FY25, registering the year-on-year growth of 19%. The telecom segment contributed Rs 349 crores and project segment contributed Rs 564 crores in company's operating turnover. The profit before tax in Q3 FY26 is slightly lower as compared to PBT in Q3 FY25 due to execution of slightly more number of low-margin projects in this quarter. However, company is confident to achieve the overall revenue and profits as per the previous projections. The company achieved the total income of Rs 2,648 crores during previous 9 months period ended on 31/12/2025, registering 19% year-on-year growth. The profit before tax in 9 months period ended on December 25 is Rs 280 crore as against Rs 251 crores in corresponding period of previous years, registering a year-on-year growth of 12%. Earning per share in 9 months period ended on December 25 stands at Rs 6.37 as against Rs 5.81 of 9 months period ended on December 24, registering a year-on-year growth of 10%. The company's order book is robust at Rs 8,497 crore, which will give us required thrust for future growth. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Good afternoon, sir. Thanks for opportunity. I got few questions. First, on the bookkeeping side, can you give us a revenue breakup for the 3 segments within telecom business?
So right now we have two segments.
Okay.
Telecom and project. Hello?
No, within telecom, NLD, ISP and IP1.
Okay. Within telecom. Right. Okay. So it is rupees 155 crore from NLD, 113 crore from ISP, and 25 crore from IP1. This is the breakup of core telecom income. Other than telecom income, we have ICT revenue of 54 crore, which includes data center and other incomes, and other operating income of 3 crore. So total put together is 350 crore.
That's very clear. Sir, just one question on the telecom business, particularly. Now, this year appears to be slightly weaker than earlier what we thought from the revenue growth perspective. And this quarter again appears to be even lower at 3% kind of a growth in the telecom business. How should we see this growth panning out for next year, and what really is causing this slowness in the telecom business?
Yes. So basically in telecom market, there have been, I would say that there have been constant pressure on pricing. That was one major reason for, I would say, dampened growth seen. But then, due to our continuous efforts, as I told during previous quarterly meetings, discussions, interaction with investors also, that we have increased our focus on telecom also, and those efforts have now started showing results. So I believe that in coming quarters, maybe may not be Q4, but at least from quarters in the next financial year, we will start seeing results in telecom sector also. But yes, right now whatever you said is truth. In 9 months, if you see overall, there has been 5% growth. But we, based on what I said right now, that we have now tried to find out how can we increase our telecom income, and we have accordingly increased our efforts, and those efforts will certainly bring dividends, and we should be able to maintain our growth guidance in telecom income in 8 to 9% of range.
Got it. And
is that okay?
Can you brief us what efforts are we doing in terms of accelerating the telecom revenue?
Yes. So see, one is we have to listen to the market call that you have to reduce your tariffs. Somewhere we were earlier not ready to reduce tariffs beyond a certain limit. But then for that we need to increase the network capacity and all that. And I believe we as a management think that this will certainly have impact on our strategy. So we are concentrating on NLD traffic, which is actually have been generally mute. Rail wire segment is continuously under pressure. Margins are getting thin, but we are getting now momentum in growth in numbers also, subscriber numbers. If we see right now, we have increased. We are inching towards 6 lakh subscribers. So rail wire also, we believe that we will make some impact, but our focus is mainly on NLD business.
Got it. And for this, do we need to do more capex to increase the capacity on the fiber? Because generally we have been doing capex equivalent.
Capex was already underway, and we were only to increase the line cards and all that. So that does not matter much. But we were already underway preparing for this. That's why some time is taken. And you must have seen that we have already done a lot of capex during last 2 years in our telecom network. Yeah.
And within the telecom, we also thought this data center, what we have done, deal with the Techno, that would also start contributing. Is there any delay in that contribution as well?
See, the data center, which is major contributor, which is supposed to be major contributor, is likely to be ready by March 27. because that is under construction. But yes, we have started smaller scale activities in edge data centers at 2-3 locations, like in Gurgaon, in Mumbai, and one is also now ready for starting work in Indore. Those will be small ones, and there we should get business numbers. Apart from that, our agreements with Anantraj and other like TCS and the likes, there also we are finding some traction, and we should get numbers in the next financial year from these activities in data center.
Good. Next on the project business, any new deal wins in the Kavach railway project and in deployment of 4G, 5G?
See, in deployment of Kavach, one tender we have already participated, and results of that tender is yet to be declared. But otherwise, there is a status quo as far as the PO received is concerned. We already have 2 older orders which are in East Central Railway, amounting to total rupees 468 crores, and work is going on at site in these against these 2 orders. But one tender is still undecided. We are waiting for the results to come.
And deployment of telecom services, towers and all? Anything?
So that is part of the Kavach order.
Okay.
That is part of the towers and all that thing. Erection of towers is already happening.
Okay.
Yeah.
So now coming to the guidance, you said that this year you still believe that you can do the guided number, which was around 20% growth at the top line and at the bottom line. For the 9 months at least, it doesn't look like we are on a track. What gives us the confidence that for the full year we should be able to do a 20% growth? Should be Q4 be much stronger for us?
See, if you see even previous years also, Q4 generally has been heaviest of the all 4 quarters.
Correct.
And Q3 has been slightly muted. Q2 and Q4 are the numbers bringing quarters. So Q4 certainly is going to be better. But if you see the 9 months overall numbers, you will find a trend also. 9 months put together. So Q4 is certainly going to make whatever trend has been going from last 2-3 years. Q3 is going to be heavier.
Got it. But generally Q4 is heavy, so it will come on a high base. But to achieve a 20% growth for the full year, we need to do a significantly higher in the Q4.
Yes, certainly yes.
Okay. Just one last question to understand the project business margin. It has been quite volatile, right? Ranging from a decently 6-7% margin earlier now to consistently doing 3%, 4%. Do you think there is a reset in the margin and the new margin should be anywhere between 4 and 5% in the expectation for us?
I think as far as I remember, I've been maintaining margin in 4 to 5% in the last few quarters intervention. Yes, I've been.
Okay.
Because when you increase the volume, certainly all the work you're not going to get in higher margin. We have slightly changed our strategy also, because many times you have to add value to the project. You should sometimes take a call. Sometimes you need to enter a new sector, you have to take a call. Sometimes there's a very fast turnaround in a project so that your cash flows are supported. You have to take a call. So all those factors certainly matter.
Got it.
But yes.
No.
There's one.
Just trying to understand. But this is a new normal, right now?
Yes.
Got it, sir. That's very helpful, and best of luck for the coming quarters.
Thank you. A reminder to all the participants, you may press star and one to ask a question. A reminder to all the participants, you may press star and one to ask a question. We have the next question from the line of Viraj Mithani from Jupiter Financial. Please go ahead.
Thank you for the opportunity. So my question is, how are we going to be benefiting from this recent budget proposal of announcement for increasing safety of railways?
Your voice is not very clear.
Am I clear now? Is it clear now?
Better.
Yeah. So my question is, how are we going to benefit from this budget proposal on safety equipment on this railway safety? So what are the avenues for us in this sector?
The budget is just presented, so we are also observing what finer details come out, and I think it will be appropriate only after those deliberations happen and we get the finer details to react on to that.
Okay. And so what would be your guidance for this coming this year would be? The next year would be FY27.
20% growth guidance.
20% on the sales side, and the margin side, net margins would be in range of 7%?
Net margins, yes, 8. You are talking of project margin or you are talking of overall margin?
Overall margins.
So overall margin should be 10 to 11%. EBIT I'm talking of.
So net would be 5% around, right? Okay.
No, I didn't say that. Project will be in the range of 4 to 5%. Telecom is going to be there in the range of 20-21%. So overall will be somewhere around 10 to 11%. Is that clear?
Yes, sir. Thank you and all the best.
Thank you. A reminder to all the participants, you may press star and one to ask a question. We have the next question from the line of Vishal Pariwal from PL Capital. Please go ahead.
Yes, sir. Thanks for the opportunity. Sir, in terms of the telecom services, you mentioned others data center revenue 56 crore this year. So same period last year, this number could have been how much, sir?
Last year?
Yes, sir.
Last year it was 51 crore. Data center, ICT revenue, others and data center put together. Others was 18 crore last year. This year it is 15 crore.
Okay. Got it. And similarly, sir, in terms of project services also, can you give a breakup of Indian Railway and others in the revenue?
So railway projects, if we talk of, it is 112 crores this quarter, and other than railways is 452 crores.
Okay. And sorry, sir, similarly, for the same period last year, if available, sir.
So last year for the same period, it was 123 crores from railway projects, and other than railway projects, it was 307 crores.
Okay. Got it. And the project order book that is there, so in terms of railway and non-railway, can you also provide it?
Just a minute. Projects from railways, I have it. So railway projects order book, if I talk of, it is around 1,000 crore is from railway stream, and then other than railways 511. Talking of projects, so 5,000 is non-railway and 1,000, close to 1,000 is railway. I'm talking of project income only, does not include telecom income.
Okay. So is it fair to say, I think we mentioned order book of in the range of 8,000 odd crore. So, so 10 and remaining is telecom.
Yeah, so there's telecom income, there is railway signaling projects we have, I would say, I think, so if we count signaling projects also, so it is 1,700. put together, and telecom is around 400 plus crores from railways. And other than railways also, there is telecom. So all put together is 8,400 plus.
Okay. But so generally, when we do a breakup, railway, non-railway, so telecom is a part of railway. We consider that, right?
See, these are all basically bifurcations. Whatever way you want, you can. So project income and telecom income, these are the two scenarios. Within the telecom, we generally do not bifurcate into railway telecom and other than telecom. That is not the normal. Normally, we are not taking this way. We are only bifurcating projects, railway and non-railway.
Got it, sir. Got it. Yeah, I think that's pretty much from my side, sir. I'll come back in the queue.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Participants, if you wish to ask a question, please press star and 1. We have the next follow-up question from the line of Viraj Mithani from Jupiter Financial. Please go ahead.
Yeah, am I audible, sir?
Yes, please.
Sir, recently you got some school order. What was that? Can you just give some details of it? This is cancelled again, but what is the scope in that area would be?
See,
in Bihar, we're gonna,
Yeah. So you are talking about cancelled order, you are talking about new order?
New order and cancelled both. Bihar, we got some school order and they are cancelled.
Yeah, so
and then we got...
So there are some, they are basically education in Bihar. They are working on many fronts. So they are setting up new laboratories in schools. So one project is related to laboratories, setting up of physics, chemistry and biology laboratories. So that is staying, and we are working already. Work is in progress. The other one is basically around smart class. That was about smart class. We really don't know reason behind the cancellation. It's because of their own internal decision. But so we have not been told also, but they have withdrawn those orders.
And sir, what would be our margins in this smart class business? What kind of margins we expect?
4 to 5% only. Same.
4 to 5%.
Yes.
Okay. And sir, we had some hospital project also, which was done on pilot basis. Is there any scope there? Hospital management.
Which one?
RailTel did some hospital management project sometimes ago on a pilot basis.
Hospital management for whom?
On a pilot basis, done some for the government hospitals. Was done some years ago. So
no. We have rolled out a very huge hospital management information system for Indian Railways. There are more than 700 hospitals and dispensaries, railway dispensaries, where we have already rolled out 4 or 5 years back. Recently, we have completed for Brihan Mumbai Corporation also, which is also a very sizable, good amount value of work for the same HMI. So we have, I don't remember any POC you are talking of. I just don't really
maybe it's the same project maybe you're talking about, which you're talking about.
Okay. But those are full-fledged projects. They are not POC.
Okay, and they are margin accretive, right?
Yeah.
Okay. Thank you and all the best, sir.
Thank you.
Thank you. A final reminder to all the participants, you may press star and 1 to ask a question. Thank you very much. As there are no further questions from the participants, we would conclude the call now. On behalf of PL Capital, that concludes this conference. Thank you for joining with us today, and you may now disconnect your line.